Welcome back to Boni's Life, where we decode the complex world of cryptocurrency markets with clarity, insight, and just enough wit to keep you awake during the technical bits. I'm Boni, and today we're diving deep into two interconnected phenomena that are quietly reshaping the entire crypto landscape: altcoin rotation and token unlocks. Now, before you click away thinking this is another boring technical analysis video, let me tell you something. Understanding these two concepts isn't just academic exercise. It's the difference between riding the wave and getting crushed by it. We're talking about billions of dollars in capital movements, institutional strategies that could make or break your portfolio, and timing mechanisms that separate the wheat from the chaff in this market. Let's start with a reality check. As I'm recording this in July 2025, Bitcoin dominance sits at around 65 to 66%. That's not just a number, it's a story. It tells us that despite all the innovation, all the new projects, all the promises of the next big thing, investors are still playing it safe with digital gold. But here's where it gets interesting and where most people get it completely wrong. See, altcoin rotation isn't some mystical force that happens randomly. It's a predictable pattern driven by human psychology, market mechanics, and this is crucial, institutional behavior that's evolved dramatically since the last major cycle. Abdul Rafai Gadid, co-founder of ZigChain, put it perfectly when he told us in May, 80 to 90% of tokens are down, but Bitcoin has skewed the entire market perception. Once rate cuts begin and inflation stabilizes, money will flow to other assets as well. Think of altcoin rotation like water flowing downhill. It always takes the path of least resistance, but the landscape keeps changing. In previous cycles, the pattern was beautifully simple. Bitcoin pumps, Bitcoin stabilizes, smart money rotates to Ethereum, then to large cap altcoins, then to small cap altcoins, then everyone gets wrecked and we start over. But 2024 and 2025 have thrown that playbook out the window. The Blockschool's research team, and these guys know their stuff, pointed out something fascinating. Unlike past booms, 2024 has bucked the trend with BTC holding strong while altcoins struggle to steal the spotlight. Why? Three game-changing factors: Ethereum's underperformance, institutional dominance through ETFs, and Bitcoin hitting all-time highs before the halving. That last one is particularly important because it broke the traditional cycle timing that everyone was expecting. But here's where it gets really interesting. The institutional money isn't playing by retail rules anymore. When BlackRock and Fidelity are buying Bitcoin through ETFs, they're not looking at 3-month cycles. They're thinking in years, maybe decades. This creates a completely different dynamic where Bitcoin can maintain dominance much longer than historical patterns would suggest. The Altcoin Season Index, which measures when 75% of the top 50 altcoins outperform Bitcoin over 90 days, currently sits at a measly 20 to 22. That's deep Bitcoin season territory. But before you despair, remember that the best opportunities often come when everyone else has given up hope. Now, let's talk about the elephant in the room: token unlocks. If altcoin rotation is the tide, token unlocks are the individual waves that can either lift your boat or sink it. And in 2025, we're seeing unlock events that dwarf anything from previous cycles. For those new to this concept, let me break it down simply. When a crypto project launches, not all tokens are immediately available for trading. Teams, early investors, and advisors typically have their tokens locked up for months or years. This is called vesting, and it's designed to prevent immediate dumping and align long-term interests. But when those locks expire, when tokens unlock, suddenly millions or billions of dollars worth of previously restricted tokens can hit the market. June 2025 alone saw $2.7 billion in token unlocks. July brought another $129 million in major unlocks, including SUI, ENA, and ZETA. These aren't just numbers, they're market-moving events that create both massive risks and incredible opportunities for those who understand the mechanics. Here's what most people get wrong about unlocks. They assume unlocks automatically mean price dumps. That's amateur thinking. The reality is far more nuanced. Yes, unlocks increase supply, but the market impact depends on dozens of factors. The project's fundamentals, current market sentiment, the size of the unlock relative to trading volume, and this is crucial, whether the unlock was already priced in. Smart money doesn't just react to unlocks, they position around them. They're buying the fear before the unlock, selling into the relief rally after, or sometimes doing the exact opposite if they think the market has overcorrected. This is where understanding both altcoin rotation and token unlocks becomes a superpower. But let's zoom out for a moment and talk about the macro picture, because this is where the real alpha lies. The Federal Reserve's recent policy changes are flying under most people's radar, but they're absolutely crucial for understanding what's coming next. In April 2025, the Fed withdrew its guidance requiring banks to notify them before engaging in crypto activities. That might sound boring, but it's actually huge. It signals a fundamental shift from crypto is dangerous, stay away, to crypto is part of the financial system. Let's figure out how to do this safely. When banks can engage with crypto without jumping through regulatory hoops, that's when institutional adoption really accelerates. Guarded's prediction about rate cuts triggering altcoin rotation isn't just hopeful thinking, it's based on solid economic logic. When interest rates fall, investors move money from safe, low-yield assets to riskier, higher potential investments. In the crypto world, that means moving from Bitcoin to altcoins. It's the same risk-on, risk-off dynamic we see in traditional markets, just amplified. Speaking of Guarded, his bullishness on tokenization and DeFi deserves serious attention. The DeFi sector overall, especially tokenization, is pretty much undervalued right now, he told us. This isn't just another crypto bro making bold predictions. ZigChain is actively tokenizing $2.5 billion worth of Dubai real estate over the next 3 years. When you can break down a $15 million private credit deal into $1,000 units accessible globally, you're not just innovating, you're democratizing finance. This brings us to a crucial point about the next altcoin rotation. It's not going to be driven by meme coins and speculation like previous cycles. It's going to be driven by utility, real-world adoption, and regulatory clarity. The projects that survive and thrive will be those solving actual problems, not just promising moon missions. The regulatory environment is also shifting in ways that favor altcoins with strong fundamentals. The SEC's approval of Grayscale's mixed crypto fund and their work on simplified ETF approval processes signal that regulators are moving from blanket skepticism to nuanced evaluation. Projects that can demonstrate compliance and utility will have massive advantages over those that can't. Now let's get tactical. If you're positioning for the next altcoin rotation, you need to understand the sectors most likely to benefit. Based on our research and expert interviews, here are the key areas to watch. First, infrastructure plays. As the crypto ecosystem matures, the picks and shovels of blockchain infrastructure become increasingly valuable. Think Layer 1 protocols with strong developer activity, Layer 2 scaling solutions with growing adoption, and cross-chain interoperability projects solving real problems. Second, real-world asset tokenization. This isn't just a buzzword anymore. it's happening at scale. From real estate to private credit to commodities, the tokenization of traditional assets is creating entirely new markets. Projects leading this charge are positioning themselves for massive growth as institutional adoption accelerates. Third, DeFi 2.0. Not the Ponzi schemes and yield farming nonsense from 2021, but sustainable, compliant, utility-driven decentralized finance. Projects that can offer real financial services while navigating regulatory requirements will capture enormous value as traditional finance embraces blockchain technology. When it comes to token unlocks, the strategy isn't to avoid them, it's to understand them and position accordingly. Here's the framework I use. For projects with strong fundamentals and growing adoption, unlocks often create temporary buying opportunities as short-term holders panic. The key is distinguishing between projects where unlocks represent genuine selling pressure versus those where they're just noise in a longer-term growth story. For projects with questionable fundamentals or declining metrics, unlocks can be devastating. These are the ones to avoid or short if you're sophisticated enough to handle that level of risk. The market is becoming increasingly efficient at pricing in these risks, so the easy money from unlock arbitrage is getting harder to find. The most important thing to understand is that we're in a transitional period. The old patterns of altcoin rotation are evolving, influenced by institutional adoption, regulatory clarity, and macroeconomic factors that didn't exist in previous cycles. This creates both challenges and opportunities for individual investors. For timing, watch these key indicators. Bitcoin dominance breaking below 60%, the altcoin season index moving above 50, increasing stablecoin supply indicating fresh capital entering the market, and this is crucial, Federal Reserve policy shifts that reduce the opportunity cost of holding risk assets. The institutional adoption story is just beginning. When pension funds, endowments, and sovereign wealth funds start allocating to crypto beyond just Bitcoin, that's when the real altcoin rotation begins. We're seeing early signs of this with increased institutional interest in Ethereum, but the broader altcoin market is still largely retail-driven. Regulatory developments globally are also creating new dynamics. The EU's MiCA regulation, the UK's crypto framework, and potential US legislation are all moving toward providing clarity rather than prohibition. This regulatory maturation favors projects that have been building compliance from day one rather than those trying to retrofit it. From a technology perspective, we're seeing real adoption of blockchain solutions in enterprise settings. This isn't the speculative adoption of 2017 or the DeFi summer of 2020. It's sustainable, revenue-generating adoption that creates genuine value. Projects capturing this trend will be the big winners in the next rotation. The market structure itself is evolving. Increased institutional participation, better market making, and more sophisticated trading infrastructure mean that altcoin rotations will be smoother but potentially less explosive than previous cycles. The days of 100x returns in a month are probably behind us, but sustainable 5 to 10x returns over longer periods are very much possible. For individual investors, this means adjusting expectations and strategies. Instead of looking for the next Dogecoin, focus on projects with strong fundamentals, clear utility, regulatory compliance, and growing adoption. The market is maturing, and mature markets reward quality over speculation. Looking ahead to the rest of 2025 and into 2026, several catalysts could trigger the next major altcoin rotation. Federal Reserve rate cuts, which seem increasingly likely given current economic conditions. Major institutional allocations beyond Bitcoin and Ethereum. Regulatory clarity from the SEC on altcoin classification, and breakthrough adoption of real-world asset tokenization at scale. The key to navigating this environment is patience, discipline, and a deep understanding of the underlying fundamentals. Don't chase pumps, don't panic during unlocks, and don't try to time the market perfectly. Instead, build a diversified portfolio of high-quality projects, understand their unlock schedules, and position for the long-term trends reshaping the industry. To wrap up, altcoin rotation and token unlocks aren't separate phenomena. They're interconnected forces that, when understood properly, can provide significant advantages in crypto markets. The next rotation will be different from previous cycles, driven more by fundamentals and institutional adoption than pure speculation. Token unlocks will continue to create volatility, but they'll also create opportunities for those who do their homework. The winners in this new environment will be projects solving real problems, complying with regulations, and building sustainable businesses. The losers will be those still playing by the old rules of hype and speculation. Remember, in crypto markets, information is alpha, timing is everything, and understanding the underlying mechanics gives you an edge that most participants simply don't have. Use that edge wisely. That's all for today's deep dive into altcoin rotation and token unlocks. If this analysis helped clarify these complex topics, smash that like button, subscribe for more institutional-grade crypto analysis, and ring the notification bell so you never miss our market insights. Drop a comment below with your thoughts on the next altcoin rotation. I've read every single one and often feature the best insights in future videos. Until next time, this is Boni reminding you to stay informed, stay disciplined, and never invest more than you can afford to lose. The crypto markets wait for no one, but with the right knowledge and strategy, you can position yourself to benefit from the opportunities ahead.